So last week, Palantir reported Q4 earnings and full year 2020 results. We've already covered Palantir on this channel, and as most of you will know, I do own Palantir stock. The results were not bad in my humble opinion, however, I would say they were mixed. Definitely one positive for me was top line revenue at $322 million for Q4 alone, which equaled growth of over 40% year over year. Now, it isn't a huge surprise the stock sold off, considering it had a great run up to around $38 per share, and the valuation was becoming a little bit steep in my opinion. Also, a lot of people have very high expectations for Palantir, and the fact they were unable to pull through on the bottom line numbers obviously made some investors or analysts nervy. Now, some investors and analysts were concerned with the commercial segment growth and a reliance on big ticket contracts too, which in my opinion is nothing that we didn't know already. The drop was around 34%, but it has since marched back up to $29 per share, which is around a 24% drop from the high. Just for disclosure, like I said, I do own Palantir stock already. Not a huge amount, but I am bullish on the company's future, and I will do my absolute best to still conduct an unbiased review of the facts. A couple of things that I want to talk about in this update. So firstly, I want to review the full year 2020 results and talk about why they are better than most people or analysts may think. Secondly, the investment thesis or bull case for this company, not the short-term outlook, but the long-term destination for Palantir. We'll also listen to what Cathie Wood had to say. I'll just drop in a short clip because she really hits the nail on the head about what Palantir investors should be looking at. Lastly, I want to cover their brief guidance they gave for the next 5 years, and it's good that they did give us that guidance, whether it be accurate or not. It's good to see how they're thinking, and we'll revisit my valuation very quickly just to check if we're still on track. If you would like to see a deep dive into Palantir and all of its products and what it offers, and a full valuation of the stock, you can watch my previous video on Palantir from a few months ago. Not much has changed from that period apart from the stock price. Okay, so the Q4 results, they were obviously impressive from a revenue perspective, although I do feel some people still have unreasonable expectations of how quickly a company can grow over a sustained period. 30 to 40% over a 5-10 year period or longer is a very powerful thing. You need to remember that. So revenue got to 1.1 billion for the full year, up 47% year over year, which is a big number. And then the quarter alone was up 40% year over year, as we just spoke about. Some new contracts with some big names as well, PG&E, Rio Tinto, US Army, the British NHS as well. And they've also given some guidance for Q1 2021 revenue growth to be 45% year over year, which again would be another massive achievement. So the bottom line numbers, which were the disappointment for most investors from what I could gather, were actually much better than they look at first glance. So if we back out a lot of the stock-based compensation or associated stock-based compensation expense that were from the public listing and stock-based comp throughout the year, they actually achieved a 28.7% operating margin. And you could even take it a step further and back out the associated taxes paid on these compensation costs. And that would look even better. And on a full year basis, they made a 9% operating profit if we back those stock-based compensations out. Now, that's not to say that we will not see any stock-based comp going forward for Palantir, but it's very unlikely we will see compensation of this size, given the majority of the cost was associated with the direct listing, because insiders are looking to cash out their options. But that compensation ratio should decline as the business matures is probably a better way to put it, rather than just saying it's a complete one-off cost that will go away forever. Secondly, gross margins were higher than ever. The cost of revenue has improved with scale, and this is likely due to the increased spend of the current customers that they have, so it's a lower cost of acquisition. And with Q4 gross profit reaching 84% and full year reaching 81%, that's a fantastic margin that will leave lots of room for profit and cash flow on the bottom line into the future. As you know, I like businesses with high gross margins for this reason, and it makes the price to sales valuation seem more reasonable when you have a business that has the potential to reach a 30% or more operating margin in the near future. Okay, now I want to come away from the near-term distractions or financials for this company, as it only tells us some of what we need to know as long-term investors. Let's cover the potential investment thesis, just recap that for this company, and then listen to a short clip of Cathie Wood very recently and what she had to say, because like I said, it pretty much hits the nail on the head in terms of how you should be thinking about a company like Palantir.
Let me ask you about Palantir, which we just found out you've added to Can you tell our viewers why you added rather significantly to your stake in Palantir?
Yes, they reported yesterday, and the stock was down on the report. It's interesting to listen to the CEO. He was speaking our language. He essentially said to investors, we are playing in a massive space here, and we're going to invest aggressively now in order to capitalize on the exponential changes that are taking place here. So if you are short-term in your focus, you probably don't want to spend too much time investing in Palantir. So that's music to our ears because, and we do believe more and more companies are going to start behaving in this way instead of catering to short-term time horizons and what we would say in some cases short-sighted shareholders who are much more interested in profits now, dividends now, share repurchases now, than they are in a company investing aggressively for going short-term profitability in order to really to catch some very big waves out there. So I'm astonished. Their revenues are still 61% government. But I've learned, and I think most people in the innovation space have learned over time, that some of the most important innovations in our lifetimes have started in the government, especially in the defense sector and in the intelligence sector. So we think in many ways, and they won't talk about how, but they're certainly garnering a lot of business, which tells us that they are, and investing in the future in ways that companies are going to need, especially as we're competing against China. We have not been spending enough in innovation. And so, Palantir's attitude is refreshing. It's exactly how we invest. We want our companies to invest aggressively. We don't want profits now. We want them to invest aggressively because we're moving into many winner-take-most markets.
Okay, so a few points just leading on from what Cathie Wood said. We need to think about the destination of this business, not its near-term margins and growth year over year. So let's refresh our memory on Palantir's aim or long-term vision. First, to be the most important software business in the world. Not the biggest, not the most profitable, but the most important to its customers. And their customers being the world, at least in this scenario. My belief is the majority of Palantir's potential customers don't actually know they need the solutions or could adopt the solutions that Palantir can offer them yet. And they will likely be made aware as transformations in the world and business accelerate into the future. Most of the long-term success stories in business are not fueled by financial targets, definitely not near-term financial targets, but by exceeding customer needs and expectations on a consistent basis to an extent that customers always return as there's a relentless focus on improving their experience. And Amazon, Apple, Costco are all very good examples of this playing out. And second is to create products, services and solutions for the world 5 years before they think that they need them. Another powerful vision that is long-term focused and revolves around relentless improvement rather than short-term margin expectations or short-term growth expectations. They've shown they can do this thus far, but if they continue to do it in the next period of rapid accelerated technological change, then the results will definitely speak for themselves. Keeping both of these visions in mind, it's important to factor them in and know that Palantir's growth or progress isn't always going to be linear. They want it to be consistent in the sense that over a 5-10 year period you will see visible progress, but it's not always going to be linear because they're not prioritizing those near-term targets, those near-term financial targets. They're thinking more about a long-term vision that will take the company to a different destination. Okay, a couple other points to consider when trying to think about Palantir as a long-term play. So what separates this from seemingly similar speculative bets, in my opinion, is that it has very much proven products, high customer retention, and a clear path to profitability with the excellent gross margins that they've put on display. Its total addressable market is still in the infancy stages and has the potential to be a much bigger space than it already is as businesses' needs and demands switch to a more sophisticated technology, data, AI-based solutions. The government organisation segment will dominate for a while, and that's to be expected. I wouldn't get nervy about that, as their needs are always further ahead than the commercial outfits that are out there. Also, more businesses than ever are entering the $500 million threshold that Palantir set for their target customers in terms of yearly revenue. This means that, again, the commercial segment will take time to build out, but over time it will become a larger part of the business as the market starts to expand. And lastly, Palantir's presence and loud entrance into the public markets has woken businesses to realizing the potential for more advanced data solutions that it can provide them, leading to a positive and cost-efficient network effect. Finally, let's revisit the valuation we did on Palantir, or I did on Palantir. I've amended it slightly to show you some scenarios. Now, just to be clear, Palantir is not going to seem cheap to anyone, and shouldn't for that matter. It's priced at a big premium and carries expectations for a long sustained growth period. But I'll tell you, I have it in my portfolio as a small bet, which I feel has the potential to outperform. My cost basis wasn't very low, and I didn't manage to get in early, around say the $10 to $18 mark, but I'm okay with holding this company for a long period of time and will welcome another 50% drop to buy even more. So should any bad news arise, I actually would be quite happy. The story and product excellence made me feel this business has the potential to grow for a very long time. Considering the points we covered earlier in this video, I have complete faith the business is not at risk of capitulating, so my only risk is an underperformance on the stock. And with all that being said, a 5 to 10 year DCF valuation doesn't do it complete justice, but it's a useful tool to look at as we need some kind of financial output or model to measure Palantir's potential value. Now, Palantir, or Alex Karp, the CEO, gave 5-year guidance that they should reach $4 billion in revenue, or around over $4 billion in 2025, meaning they will grow at above a 30% rate constantly for the next 5 years, which seems more than possible given last year and this year's results and their guidance they're giving for the first quarter of next year. So if we use that guidance for the next 5 years and then just pull forward another extended period of growth that I think that they could achieve, that gets us to around $14 billion of revenue in 2030 and manages to get a 30% margin by 2025 and then scale it up a little bit further into the future. And so with that, we get a fair value of $22 per share today, or $35 billion as a market cap. However, I think they're playing down their guidance to an extent. Similarly, they gave guidance that revenue would be up 40% in 2020, and then they beat by 7 percentage points. That could be a coincidence. This isn't the safest assumption to make, I will say that, but from all the research I've done on the company, I think they can average 35 to 40% for at least the next 3 to 5 years. And like I said, Palantir's long runway for growth is going to be long, and as a number of available customers will grow consistently over the next decade or more, and they will continue to be a dominant force in this space. So my scenario is this. They average 40% for the next 3 years, let's say. I mean, they're already given guidance for 2021 that Q1 is going to be around 47% growth, so I don't see that dropping for no reason in the quarters or years after that. Maybe as we get to this period, growth will slow, and that's what I've put in. Gets to 35, then to 30, then to 25 towards the end of the period. And this gets Palantir to around $18.5 billion in revenue, which is large but doesn't make them seem like a behemoth by any means. And this is what I mean by sometimes getting caught up in the year-over-year growth rates. Really, with certain businesses, it's beneficial to think about what the likely destination is for this business in 10 years' time, or even more in some cases. And here I think 18 billion, which is around a 10% capture of their current addressable market, is a fair judgment, considering they seem to be far and away the best data analytics company to deploy for their target customer base. I don't even think alternatives are close from what I can tell at the moment, meaning they should quickly eat market share whilst that market continues to expand, and it will be a powerful combination to have. So this actually gets us to a fair price of $29 per share, depending on your multiple. So if I put in a 35 times multiple, actually it gets us to $33.50 per share. So if I said that Palantir always going to have a multiple that matches the software system and application industry, as well as the US market, and then a similar company that's around 10 years or 5 years ahead of, let's say, Palantir. We average those out, we get 35 times EBIT multiple. Then the fair value is a lot higher than we are now by around 15 to 20%. If we want to go a bit more conservative and say it's going to stick at 30, which is closer to the market average, then we've got a buy price or fair price today of $29 per share, which matches the current stock price, meaning that Palantir is around fair value after the recent dip. And if you haven't got a position in Palantir right now, it could be a good time to get in, especially if it drops even further. And it's up to you what multiple you think is more likely or more fair to use. A 35 would be a lot more bullish, but I can see a software company, especially one like Palantir, if it's still growing in 2030, will be priced at a premium around 35, considering the industry as a whole and considering some comparable companies. Even 29, though, if you want to be conservative, shows that you could buy at fair price today, which is good to see. But again, though, this is just a tool to use to assess value. It shouldn't be taken as concrete, especially for a business like Palantir. So don't worry if your cost basis is higher than the current price. This is just my take on it and my valuation. So in summary, these are my thoughts on the recent Palantir earnings, guidance, etc., and the recent sell-off. Although I wouldn't be betting the farm on it, it still looks like a good long-term hold for me here. And that's just about it for this video. Hope you enjoyed. If you did, leave a thumbs up, subscribe to the channel if you haven't already, and I'll see you all in the next video. Good luck with your investments.